Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
As you said, right now, the markets appear to be full of juicy toppiness, but when are they going to go down, and how long can this be sustained? Well, we've been asking that now for 2.5 years, but there's all this manipulation going on. The Bank of Japan, for example, is now buying equity shares to the point that by the end of the year, they'll be the majority shareholder in 55 of Japan's major companies. Is that the way to run an economy, or is that the way to run an economy into the hole?
Well, it's the way to make a bad mess worse, and there was also, I don't have the blurb in front of me, but there was also a comment from Yellen about, maybe it's time to buy securities. I forget exactly how it was said. Someone told me about it, and then I did see the quote, but I don't remember exactly how it was worded. Same thing. It boils down to, I think, that obviously they know what a bubble and what a mess it was, because if not, then why the intervention? Why? And, they've all but here, I don't want to say destroyed, a free market, but yes, it's affected the cycles. Yes, it's affected, even, the Dow theory work and so forth, but I will maintain there is no way under the sun they're going to win at this game. You can stretch, you can extend, you can manipulate, but it has to unwind. The cycle has to be expressed. And, the danger with this is the complacency that it has caused. No one believes, technicians and other market analysts such as myself anymore, because, quite frankly, the Fed is, let's just say it, made a fool of us. But looking at what I'm looking at, knowing what I know, seeing what I see, this is, Jim, it is without question. It's just a historical fact. It's the most extended 4-year cycle in history, and to extend one out like this, you just don't get away with that. I have seen ever since the DNA markers started trying to set up in 14 and into 15, right as the market will get at a particularly important technical juncture, there's an announcement. There's something comes out, the Bank of Japan, or something with China, or, Fed governor speaks, and I think that they are not watching technicals and understand, the seriousness of the situation is naive. I don't know. That's the $64,000 question. How long the can be kicked down the road, as they say. But there is no question in my mind that this is one hell of an extended bubble, that the manipulation makes it worse, and that ultimately Mother Nature is going to have its way. One of these setups it's going to come unraveled, and that's why I think they are so afraid to even let it correct hardly any at all. It's like, because I think the avalanche will begin. I don't think it's going to take much, and I think that's why the concentrated effort to keep it up.
Well, we can see how certain news stories also affect the markets. 2 days ago, they were saying Deutsche Bank was in such trouble that it might need a government bailout. Today, Deutsche Bank says their balance books have never been better in 20 years because they'll only have to pay $5.5 billion to the U.S. Department of Justice instead of $14 billion.
It's comical, man. It is crazy. I got some people I talked to overseas, and he said they're afraid they're going to close the banks over there, and then you hear stories like this. It's that's the kind of thing I'm talking about. It's just nuts. It's nuts. Look, on the one hand, I stand by traditional technical analysis and Dow theory. Everybody thinks Dow theory is a joke. I love it. But, it has proven itself since 1896. And, I watched, I called the 2000 top in real time with, using cycles and watched Richard Russell call it using, Dow theory. I used it with the top in 2007. And even with the advance out of the 2011 low that people thought was a crack into a 4-year cycle low. The point is, it has a track record. It works. And it's working today. It's warning. It's been warning for over a year. And the fact that, nothing has come to fruition, well, that's a horse of a whole nother color. That's not an excuse. That's what we're talking about here is that manipulation. And it's real simple. One of two things is going to happen. Either, successfully it's blown out, but that's okay. Like I said, it's going to make a bad situation even worse. And then we'll see another setup. The Dow theory is going to tell us. It's warning now. If it's blown out, fine. It'll warn again. I mean, you can only keep this up so long. And in a perfect example, the thing I go back to is think of any time in history. Has there ever been perpetual manipulation of anything? No. It always blows. It never ends well. And the fact that they have done this so successfully for so long, it just adds fuel to the fire in that it creates that complacency that puts everybody to sleep. And then once it begins, they're not going to realize what's happened. I think it's going to avalanche so fast when it does happen that it's just going to be devastating. But for now, hey, here we are.
And of course, the $8 billion question is, when is this going to happen?
With us, we go through, you don't know which setup, but the beauty with the technical analysis and the cycles work is when you go into one of those windows of opportunity. And so you go, oh crap, I know I'm walking through the minefield. Well, okay, it's passed. We're through it. And so we know that much. But like I said, the longer term setup with our Dow theory non-confirmations and our Dow theory primary bearish trend change from 2015 stand, and they are warning. And like I said, it really, on the one hand, I wish they would get blown out so it wouldn't feel like I'm having to fight the market, so to speak. But, to say that you have a Dow theory bearish trend change and the market's held up, that's a tough position to be in. But it is what it is, and I'm calling it like it is. So, I really don't care. It's amazing to watch.
Is this a very bad time for someone to try to get a startup company on the stock exchanges?
I don't know about that. I think it's a bad time. Let me answer it this way. I think knowing what I think I know, that the position that this economy is in and the bubble that we face, even if it doesn't crack for, 6 months or a year or two, I mean, I wouldn't want to be in the position of starting a new company of any size with being on the top of a bubble. That's risky. I mean, it's just risky in this environment. And, I guess as you think about it, that's another reason we need to wash out. If you look back, with the business cycle, everybody's heard about the business cycle and the 4-year cycle. I mean, that's not gibberish. I mean, you look at a chart and you can see it. I mean, it's averaged 48 months and some change since 1896, and it goes up and it goes down and it goes up and it goes down. And within that, you have secular bull and bear market periods, and those are cycles, if you will, in and of themselves, and they have rhythm and they rhyme. And, it's a historical fact that every secular bear market's lasted about a third the duration of the previous secular bull market. And so there are these natural rhythms and occurrences in business and the economy and the market and the way things work. And this has been terribly disturbed. And like I said, there is no point in history where anyone has ever gotten away with this. And like I said, I guess the answer to your question, I'm back to the same thing. But to start a business, I guess the answer to your question, it would scare hell out of me to be in that position of some sort of a major startup, knowing what I know.
We'll have more with Tim Wood right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Tim Wood. Tim, what's going to happen with the price of oil? I know it's been around the $48 mark since they made the announcement OPEC might talk about freezing production, but is that number going to hold?
Don't know. Let's just stick with the cycles, because that's what I do. We identified the top, and we talked about the seasonality before, but we identified the so-called seasonal cycle top back in June, and that is the seasonal tendency. You get, we talked about that. You get a low sometime in the winter. Sometimes it's in, maybe November, December. That November's a little early, but there's a tendency. I'd say December to February-ish. You tend to get your low, and then there's price goes up into the driving season, and that's sometimes it's May, June, July, or even August. So every indication is not just based on the seasonal tendency. The seasonal tendency fits with the cycles, it fits with the structure, it fits with the indicators. And so every indication is a long answer here, but every indication is that we saw the top in June, and that we should go back down and, and I've said, and at least retest that February low. I stand by that. The structure, we do have structure still in place that suggests that we had an intermediate degree low coming out of the August 5th low. I think it's a counter-trend rally and a retest of the June high. Now, it would be unusual structure, which would tell us something. It would be very unusual structure to see that June high bettered at this point. If that were to happen, then okay, I have to readdress it. Something else may be going on. But I think what we're seeing is like I said, just a counter-trend deep retest. It's kind of lingering, but I do think there's a trip back down to at least retest that low and probably mark a longer-term low then for crude oil.
Gold, of course, had major success in the first half of the year. Are we still going to see it go down now? I
think so. I was just working on my newsletter, and, gold, look, it has been, there is some positive that's undeniable about the advance, and one of them is the duration. Looking at cycles, there's something called right and left translation, and they have certain characteristics and statistical probabilities assigned to the structure or translation of a cycle of a given degree, and there's some positive there. But the one negative overriding factor is that there should be another, again, just like crude oil, at least another trip back down toward that December low before we get the final 9-year cycle low. I've been saying that. ever since this rally began, and crude oil, or excuse me, gold has basically flatlined since our intermediate term top back in July. It hasn't cracked down out of that top, but nonetheless, the structure's still there, the top's still there. So at this point, yes, I maintain that there's another trip back down before the final 9-year cycle low. And then even if we don't violate the December low, I think there's a retest of that low, and then once that low is in place, then I think we have a solid bottom in gold. But right now, no. The risk I feel is to the downside, not the upside.
Tim, do you expect when the equity market avalanche starts that gold will skyrocket?
No, not really. My expectation has been more kind of like in 2007-8. Everything pretty much went down together. I've been kind of thinking that we get the washout with everything together, and then equities kind of more or less flatline, coming out of that low, but then gold and commodities probably soar. So I'm looking for more of a washout scenario, and then I think gold shines.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Our YouTube channel is Talk Digital Network. On Twitter, you can find us at Talk Digital Net. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.